Hello there, and congratulations, new accountant. You're about to embark on a journey into the exciting world of accounting, where numbers rule and ethics matter. And by matter, we mean they can get you fired, sued, or thrown in jail. But don't worry, we are here to help. In this video, we'll cover the basics of ethics in accounting and how to avoid the most common pitfalls. So sit back, relax, and try not to fall asleep. Hey, wake up! This is important stuff. Let's start with the basics. What is ethics?
Doing the right thing?
Close enough. Ethics is a set of moral principles and values that guide behavior. In accounting, ethics is about doing the right thing when it comes to financial reporting, auditing, and other accounting activities.
But what if doing the right thing gets in the way of making money?
Ah, the age-old question. But here's the thing. Ethics and profits are not mutually exclusive. In fact, ethical behavior can actually help you make more money in the long run by building trust and credibility with your clients and stakeholders. Accountants may also face several challenges when trying to act ethically, including pressure to achieve financial targets, conflicts of interest, and the temptation to cut corners to save time or effort. They may also face pressure from their superiors or clients to engage in unethical behavior. Additionally, complex accounting standards and regulations can make it difficult to navigate ethical dilemmas. Now let's talk about some of the most common ethical issues in accounting. First up, cookie jar accounting. No, not that kind of cookie jar. In accounting, cookie jar accounting refers to the practice of manipulating financial statements to create reserves that can be used to inflate earnings in future periods. It's kind of like saving cookies for later, but not in a good way.
I see. So that's bad, right?
Yes, cookie jar accounting is unethical and can mislead investors and other stakeholders, so don't do it. Next up, due diligence.
What's that?
Due diligence is the process of investigating and verifying information to ensure its accuracy and completeness. In accounting, due diligence is important because it helps to ensure that financial statements are accurate and reliable.
Okay, that makes sense.
How about some other ethical issues you might encounter in your accounting career? For example, what do you do if a salesman writes off too many expenses? The key is to make sure that the expenses are legitimate and related to the business. If they're not, you need to report them as personal expenses and adjust the financial statements accordingly.
What if I don't feel capable of doing a task that's been assigned to me?
As an accountant, you may be assigned tasks that seem difficult or even impossible. But one of the tenets in the field is competence, so it's okay to ask for help. Reach out to a more experienced colleague or supervisor and explain the situation. They may be able to provide guidance or even take over the task themselves. Remember, it's better to ask for help than to risk making a mistake that could have serious consequences for your company and your career. With the support of your colleagues and a commitment to ethical behavior, you can overcome any challenge and build a successful career as an accountant.
What if my brother-in-law who owns a car wash underreports his income?
As an accountant, you have a duty to report accurate information to the IRS. That means you can't turn a blind eye to underreported income, even if it's a family member. Encourage your brother-in-law to report his income accurately and offer to help him with his taxes.
One more question. What if I have a client who owns a hobby shop that's not charging sales tax for online purchases?
Sales tax is a legal requirement, and failing to charge it can result in penalties and fines. As an accountant, you have a duty to ensure that your company is complying with all applicable laws and regulations. So advise the hobby shop to start charging sales tax for online purchases, and don't tempt the auditors any further. Remember, as an accountant, you are responsible for upholding ethical standards and ensuring financial integrity. So always do the right thing, even if it's not the easiest thing. Unless you work for KPMG, and then the rules don't apply. Have fun and enjoy the rest of your fraud-filled life.
Okay.
You've got 17.5% in T-bills amortized over the fiscal year, 8% in stocks and bonds. Carry the 9 to buy by the gross national product. Fortunately, funeral bouquets are deductible.